Greetings and welcome to the channel. Today I'm going to talk about this wild stock market rally we've been having. The NASDAQ is up 31% year to date. It's the best half year ever in the stock market, at least on the NASDAQ, I believe. And lately it's been spiked. On June 30th, the CPI, not the CPI, the PCE came out, the personal consumption expenditures. And it was expected that it would be at 4.6%, and it came out at 3.8%. That's a 0.8% decrease, which was just amazing. That's close to a full percentage point in a month on personal consumption expenditures. Amazing. Now, core inflation is still a problem, and it went down less. It went down to 4.6%. 4.7% was expected, so it was still considered to be a mild decrease on the core inflation, which is good. And the stock market just went wild. And all day Friday, I was trading TQQQ, which is the triple leverage bullish fund on the 100 largest companies on the NASDAQ, the QQQ, and it was very profitable. I think it's foolish to trade the SQQQ. That's shorting the QQQ in a triple leveraged way. And I think you only do that when the market's actively crashing. And I find it's much more profitable for me just to play the TQQQ and play the hills and valleys of that, as I've gotten to know the QQQ very well, and I make good money doing this. And it's actually less risky for me. In general, it's more risky to do it because it's triple leveraged. But for me, I view it as less risky in a way because I only day trade it and I don't hold it overnight. And that's when you can get the big throwdowns. This is not financial advice because I don't know your personal situation. But if I was in my 20s and 30s, I would probably be trading the QQQ. This is understanding that at that point in my life, I have a job. I can't pay every minute attention to the TQQQ, which is what I think you need to do to trade successfully. So I would trade the QQQ on a swing basis and maybe a long-term basis if this market keeps going up. The advantage of doing that is you are in the 100 best companies in the stock market, I believe, and you're going to gain, I think, as long as the rally keeps going. And if the rally quits or we have a black swan event, it allows you to get out quickly. But I think the QQQ is always good advice if the market is in an uptrend, and it is in an uptrend for now. And there's lots of good news that we can expect to keep happening because inflation is coming down. Now, when you go and shop, it doesn't feel like inflation is coming down simply because I'll give you the example of groceries. I noticed fairly early on that my grocery bill went up 25%. Okay. Now, to say that there's another 5% inflation on top of that, okay, now my groceries cost 30% more. And you hear, oh, inflation is coming down. All that means is that it's not increasing as fast as it used to. Okay, it's up from 25% to 30%. Let's put it this way: it went from 0 to 25. Okay, then it went from 25 to 30. Okay, the increase is less, but it's still an increase, and that's why inflation is so deadly. I think right now my grocery bill, when I look at it, it feels like it's 30 to 35% higher. So, whoop-de-doo, I think that's why people are, in some sense, the Fed is certainly hoping for a slowdown of the economy, if not somewhat of a reversal, so that we get some of these high prices down. But I don't know if that's very likely. The GDP indicates that we're nowhere near having a recession. It was expected to come in at 1.4%, which is still head above water, and you're not in a recession yet. But it went up to 2.0, a full 2%. So we're not in recession. We may be headed that way, but we're not headed there very fast. And the thing about Jerome Powell raising interest rate, he's going to do it because of the stock market, because the stock market, especially in the NASDAQ, has just gone completely wild. Now, the two sectors that are up the most are home builders and semiconductors. You wouldn't predict that either of these sectors would be up if we were going into a recession. You have some outstanding examples of the stock market going wild. Apple is the largest stock in the stock market. It went over $3 trillion after it went over $191 per share. Apple and Microsoft, those two stocks make up 15% of the S&P 500, which is weighted according to the size of the stock. So Apple and Microsoft are carrying a lot of weight of bringing the market up. And you have what's called the Magnificent Seven, and it's Microsoft and Apple, of course, the two big ones. And then you got NVIDIA and Tesla, which I think I follow it because I see them as the market leaders. I take the direction of the market as to how NVIDIA and Tesla are going. Those are the hot stocks right now. And also Meta, Alphabet, and Amazon. Those seven stocks are the Magnificent Seven, and they are what has been propelling the market upwards. But now we're starting to see the other stocks catching up. Some people are saying, well, the Magnificent Seven have to come down so that money flows into other stocks. And I don't think that's the case at all. I think the case is that those stocks will continue to go up, and they will continue to pull the other stocks up. It isn't a zero-sum game, and the reason it's not a zero-sum game is there's all kinds of money in bonds and on the sideline that can come into this market. The bond market is twice as big as the stock market, okay? And there's all kinds of money on the sidelines. A lot of money is in money markets, okay? And all that, if all that, or just a percentage of it, if 30% of that money came into the stock market, it would be a booming stock market. You know, sort of emblematic of the roaring times we're starting to have this. I think we're going to have a reenactment of the roaring 20s 100 years later than the 1920s. It's going to be the 2020s roaring 20s. And emblematic of that is Taylor Swift. She's given concerts, and every night she does a concert, she makes over $13 million. Wow. You know, her concerts are amazing, and they're quite a production, and I think she deserves that. If anyone deserves it, it would be her as an artist. You can tell she's one of my favorites. But where are we going forward from here? I think history favors a bullish July. This is a summer rally, a classic summer rally, and it typically shoots up in July and then tails off in August and September. And that's my gut feeling of what's going to happen. So I'm hanging on for all I'm worth to TQQQ, and I'm going to play it on a daily basis and go in and out of it depending on conditions and headline news. And what Powell says always affects the market. If he whispers, the market takes off one direction or another. And I pay close attention, and I'm in touch with day traders on Trader TV Live, and they give a good idea of what's going on, and they have an announcer who keeps you in touch with the headline news, and you can pretty much trade TQQQ on the news of the major stocks and the headline news that is driving this rally. And it's mainly that inflation is turning out not to be as bad as it could be, and we have that coming down. And also we have the jobs market continuing to have lots of jobs, low unemployment. Travel is off the Richter scale. The travel and leisure industry, hotels and stuff, they are very bullish. And semiconductors and home builders, these are the kind of stocks that do well in a bull market. And it may come to a crashing halt if we have a black swan event, but it looks unlikely that that's going to happen. They recently did a stress test of the banks, and they assumed they wanted to know what would happen if you stressed the banks. What would happen if we had 10% unemployment? Wow. Unemployment right now is about 3.6%. So if we had triple the unemployment, if commercial real estate values went down by 40%, and if home building went down 38%, the housing stocks, housing values went down by 38%. Could the banks withstand that massive of a stress? And they found that the banks could do this. Now, they focused on the 23 largest banks, but that's where most of the money is. And they put such a severe stress scenario on it that is pretty reassuring that they could withstand this. Now, which mega caps am I favoring? Again, I like the QQQ. I think that's, if I were in my 20s, 30s, 40s, I would be trading the QQQ and probably leaving it in there until I heard extremely negative news. Okay. I think the individual stocks I like best are Tesla and NVIDIA. Tesla, wow, what a company. They qualified their Model 3 for the $7,500 tax credit as of June, and they've been reducing prices of their models since January. We're going electric, and Tesla at some point is going to be making cars as cheap or cheaper than the gas-fueled cars. And they're also coming up with a new battery, which it's rumored that they're going to be able to supercharge your battery much faster than they currently can. And that's when it will really take off. We need more charging stations, and we need it to be quicker. And once that's accomplished, Tesla's going to take off like a rocket. They're already winning the charging wars. Ford and GM have agreed to use their charging network. Volvo, Polestar, and Rivian are also going to use their charging network, and they're in talks with Volkswagen to have their network used. So basically, Tesla is turning out to be the industry standard, and they're going to make $1 billion or more per year on their charging network, which again, the other companies are going to end up funding Tesla and helping Tesla move forward, which is just incredible. NVIDIA is my other favorite. I think their technology. They are so far ahead of everybody else. The only one that tends to compete with them is AMD, Advanced Micro Devices. Another stock I like is Oracle, and that's related to NVIDIA. Larry Ellison, the CEO of Oracle, said that he bought billions of dollars of NVIDIA equipment. And I think that's why the CEO of NVIDIA, Jensen Huang, is predicting that they're going to have a quarter soon where they're making $11 billion. I think he was able to predict that because of the orders coming in. Because Larry Ellison of Oracle, this is one company. Larry Ellison of Oracle says that he's already buying or has ordered billions of dollars of NVIDIA's equipment, which is just incredible. So I think we have an incredible market. I think we're going to the new century's version of the Roaring 20s. And I think you want to hang on, or at least get a part of this roar. We may have to back out, and I've made it so I can exit quickly. And I see the QQQ as being the way to benefit from this, and also exit quickly if need be. So that's the way I roll. That's all I have for today. Thanks for listening. Be sure to check back with me as I will give you more smaller scale stocks, which are seem sure to benefit from this rally. Thank you.